So the analysis in my previous video did not end up playing out as we did not end up getting the entry signal. Now let me just clean up my 4-hour chart quickly and you can see we did not manage to break a 4-hour bar low. Instead, we had a bit of a bullish pennant where you see this as your flagpole and this as your pennant structure. We broke back above the two downtrend lines. We closed back inside the 4-hour support line from the 67k low, fourth time breakout that I talked about many moons ago. However, one thing to note is even though we have seen a pretty decent move on the day, we've seen a, what is that, like a just under $2,000 move. This move here is looking much weaker than the previous moves because we're between the two trend lines rather than on top of it, which means this upper trend line here at around $81,200, which lines up with the +1 standard deviation, which has called pretty much every local top in this uptrend, will now act as resistance. Now, you can see we also have a fourth time diagonal breakdown potential on this trend line right here if I draw a new one. So if that trend line gets tested again for the fourth time, there is potential that we will break down underneath it. Now, obviously, we have this trend line here still as well, acting as support. So if price comes down in the next, well, Tuesday 2 a.m. is going to be the Monday stock market session for Americans. So if we get a sell-off across the board on stocks on the first day of the trading week, then that could very well be our fourth time breakdown on crypto, which could take us down potentially as low as $74,000, which would line up with a -1 standard deviation band, which typically serves as support in downtrends throughout this consolidation period that we've had through February into May. Now, having a look at the monthly time frame, you can see the 1-bar chart is still down, so I wouldn't be calling bull market is back unless we take out the 98.5k swing high. We did close last month with a higher low on the monthly BX trender, and we've seen around a $4,300 continuation per Bitcoin on top of the 50% level, which also happened last cycle. We tested that 50%, we saw a 2-month rally, that third month sold off, and the fourth month was our real capitulation. Potentially, that is what we're seeing now, where we see 2 months up. Were they straight up months? No, the first was an inside, second was up, and that next month was down. So maybe this month here, we edge up slightly. History doesn't have to repeat, it just has to rhyme. Maybe we test, the mid $80,000 range, maybe even the low $90,000 range. We don't take out that swing top and price capitulates. Now, back on the weekly time frame, you can see we are now 8 weeks up on the weekly BX trender. Sorry, bit of a hiccup there for me. And the last time we saw 1, 2, 3, 4, 5, 6, 7, 8, that 9th week was a reversal week, and then we pretty much grinded sideways before we capitulated. Now here, we only managed to see 6 weeks in a row of light green, but when we saw 3, 6, 8 weeks in a row of light green, that was when we broke on top of the 33 fair value band and the bull market had begun. So if we see some sort of panic sell-off into a higher low, then that could potentially be signaling that the bull market has actually begun, similar to the March Silicon Valley bank collapse of 2023. So potentially, if we make another low, maybe 67k or something like that, on more fear, that could be the start of a new bull market. However, I would take that with a serious grain of salt because we're still underneath this 33 fair value band and we haven't actually retested this trend line from the overside yet. You can see the FTX collapse of 2022 was our trendline retest, market consolidated, and then we broke back above the 33 fair value band. So I do believe the next move is still down, and I have quite some evidence to support that belief because we're now 6 weeks up in this swing. Now, if you remember Gann's 7 to 10 bar rule, maybe we see one more week up where price comes into, 82, 83k, rejects off this 33 fair value band. And as I said in my last video, even if we don't get a straight sell-off down to, 57, 58k or something like that to make a slightly lower low, even if we just consolidate and slowly grind sideways, by the time we reach, the middle of June, start of July, if we then get that capitulation, that could very well line up with with price not quite reaching the -1 standard deviation band on the weekly, similar to last cycle over here. Price didn't quite manage to touch it in the second big sell-off, and that would be our trendline retest. Maybe that happens, end of June at around 52k. Who knows? Anyways, rather than keep speculating, let's have a look at the weekly time frame. That hidden bullish divergence I was talking about did end up playing out. We reversed the daily swing, broke out of the trend line, and we're now retesting the range high trend line, which was that November sell-off low of $80,000. Now, technically, in this bear market, we have not broken a horizontal trend line in a bear flag yet. So if you've been watching Jason's YouTube videos, we have overbalanced time and price, meaning the next sell-off down is likely to be less severe than the sell-offs so far beforehand. So if I redraw this 50% tool to the new high, what was the new high? 80,000, what is it? 80,600, something like that. We now have a 50% level at $70,528 on the Binance chart. And here is where I think this rally is running out of steam. Now, firstly, on the 4-hour chart, we have seen lower volume compared to the previous moves up on this breakout bar. We are still holding above the previous highs, so potentially this is just reaccumulation. However, on the daily time frame, lower volume. Now, I'm well aware this day still has around a lot of hours. 18 hours? Yeah, because the candle closes at 10 a.m. UTC. Sorry, 10 a.m. my time or UTC midnight. So potentially this volume does pick up a bit, but it is still going to be much lower than the volume that we've seen throughout this range. You can just have a look. Anyways, we're rallying into resistance. Market data is turning back to neutral, so this relief rally from the FOMO finder being in panic and the fear and greed index being in extreme fear could be over now that sentiment has returned to very close to neutral. Exchange volume is still pitiful, and the long-short ratio is well out of balance. I think we hit 4%. The short liquidations, we've seen over 300 million. We've been liquidating shorts like crazy for the past few weeks. And last but not least, we have smacked the monthly short max pain level just shy of $80,000. But we haven't quite managed to see some strong continuation and tap that next max pain level. We've pretty much stopped dead before it, which increases the chance that we'll hit this long max pain level And if we do hit that level, you can see that is underneath these two trend lines on the daily time frame and underneath all the trend lines on the 4-hour time frame, even this one here. So potentially the rally top is in, although we could always be a little bit irrational because history doesn't have to repeat, it just has to rhyme. So maybe we do break structure slightly and we come up to, anywhere up to around $85,000. Who knows? But if I quickly pull up the liquidation map here, you can see for the first time in a long while, there is more liquidity to the downside than the upside, because we have pretty much wrecked all the shorts on the way up. So now maximum pain is to the downside. Like, for us to get $1 billion of short liquidations, price would have to squeeze up $1,200, which is not, out of the question. But for us to get that same $1 billion in long liquidations, price would need to go down about $2,300, which means even though this liquidation map is well out of balance, maybe, just maybe, we have one more leg up. We strengthen the bearish divergences here. So potentially the stochastic RSI makes a lower high compared to the previous highs, and that marks the top. We liquidate even more shorts and then we roll over to destroy all the late longs. Now, if we look at the hyperliquid liquidation map, we've got 1,000 Bitcoin to the downside at just shy of $75,000. And we have 1,000 Bitcoin to the upside at 82.2. So again, the hyperliquid map suggests we could see another move up before some moves down. And even though that $300 million of short liquidations is quite a bit, we typically do need to see closer to that $400 million or $500 million mark for some very significant tops, maybe even closer to $600 million. So we'll just have to see how this trading week plays out. And we do not have that much economic data out of the US. We got a Friday, an hour before the market opens. We got unemployment rate and a couple other things. During the market open, we got some lower impact announcements, and obviously we've got Waller speaking just after market close, right before post-market trading closes. Obviously, if you're in Australia, on Tuesday, we've got the interest rate decision, which will probably end up being a hike. And obviously on Wednesday, midnight my time, so just after US market open on Tuesday, we have job openings. So potentially there is some economic data that could be the catalyst for this final squeeze up or a massive capitulation. Now, before I wrap up the video, I'm just going to say, even though my trade setup did not end up playing out last time, we did not actually lose because we did not get that short signal. So if you did watch Michael's video from that day, you'll remember he said, even though we've come down to 74.9, the higher time frame trend is still up. So we just have to anticipate every sell-off is a correction until those higher time frame trends start shifting. And that's exactly what has happened. And speaking of, this daily swing is now 5 days up. And obviously we could see 7 days up or more, but now is probably not the time to be looking at long trades. If you're in a long, you could obviously tighten your stop losses every day, take partial profits. But now would actually be the time to consider shorting because we are moving into resistance. Now, is there a short signal that I am watching for? Well, as I talked about earlier, this fourth time breakdown on the 4-hour chart, or I'd be hoping for some inside bars on the daily chart, and a break of those inside bars could be a early short signal, because if you're waiting to short under 78k, most of that down move could have happened, because maybe we just make a higher low at 76, 77k, and then we set up for another leg higher. Speaking of the another leg higher theory, if we go back to the 2022, the strong bounce that we saw in February, we had 3 weekly upswings and higher lows. So we're currently in 2 weekly upswings. So maybe we see a massive sell-off to $66,000, $67,000, $68,000, gets all the bears excited, and then we make another push into the middle of the fair value band, maybe 82, 83, 84k. Just a theory, not much evidence to back it up other than past cycle analysis, but obviously respect the charts for the time being. If you know how to trade the 1 hour and 15-minute chart, definitely keep an eye on those. There's probably some great opportunities. But for YouTube, obviously, because I've got to upload videos, etc., I'm just going to keep my analysis to the 4-hour time frames. If you do want to jump into Discord with me, we can always look at lower term time frames. I do have my own server. It is my server right here. If you add me as a friend, I can potentially consider adding you to my Discord server. I'm no longer active in the TIA or Traders Helping Traders Discord, and I did just join the More Crypto Online Discord. I only selected bronze membership, which doesn't give me any chat rooms, because I just don't really feel like talking to people, honestly, except in my own Discord. I just really appreciate the More Crypto Online's Bitcoin and Ethereum chart analysis, because they cover Elliott waves on the 4-hour charts, and not just for Bitcoin, but altcoins, and I really, really like their analysis. Now, because this correction here did not end up playing out the way I thought it would, being a 535, it actually ended up making a 533 correction, meaning that we set up for a 1-2, and that higher low could have actually been a long signal. So in this period here, I probably should have looked at longs rather than shorts, instead of missing out on this move right here. But obviously, hindsight is 2020. If we consider this a wave 3, and this being a wave 4, if I just draw out a Elliott wave impulse, we see a 1, 2, 3, 4, 5. And then we set up for a bit of a horizontal correction here, a WXY corrective pattern. That was drawn absolutely horribly, but if we see the W wave like that, we see an X wave like that, and a Y wave like that, just ignoring the wick, we could just draw this Y wave to here. It's not super valid. We could potentially be setting up for a 1, 2, 3, 4, 5. Now, before anyone gets off at me for messing this structure up here, I haven't actually had time to think about exactly how I would draw this wave. Maybe we could draw it something like this. But either way, I do think the market is potentially setting up for another leg higher. If you ignore my absolutely horrendous Elliott waves that I just drew in the last 30 seconds, and we zoom out, I do believe there is another Elliott wave count that we could potentially look at, where this move here is our wave 1 to this peak on the 12th of April. That was our wave 2 move down through there to the 13th of April, the 70.5k low. We saw a wave 3 move up. Depending on your chart, it'll either top on the 23rd of April or the 27th of April. We saw a wave 4 move down to the 30th of April, and we see this wave, we're in the process of a wave 5 move. And that is all obviously coming off of the 3rd of April low right there. So if I draw it up perfectly like that, you can see our wave 4 low doesn't quite touch this 12th of April high, meaning this is a valid structure. Now, if I just hide that for a second, this move here out of the 30th of April low, we could consider it a 5-wave structure. So if I remove all my not so great Elliott wave analysis, we can potentially think of this as a wave 1. We see a sideways wave 2, and let me just scroll and fix that up. Maybe we see a wave 3 that ends up being smaller than the wave 1, a wave 4 that ends up being a bit of an aggressive sell-off since our wave 1 correction was quite flat, and our wave 5 being even smaller. Just a theory. Obviously, for the bulls, they're probably looking for some much bigger extensions in wave 3 and 5, but we'll just have to see what happens. But for now, let's just see where the dust settles with this next stock market session when the market opens in a couple hours time from when this video uploads. But for now, thank you all for watching. Please like, comment, and subscribe, and let's see what Bitcoin does.